Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, November 22nd, 2024. It's 11:16 a.m. Eastern Time. I'm starting the video, and I'm just going to do an eclectic mix of some of the different things I'm watching right now. I'm going to start out here with natural gas. I gave you an update this morning. We'll talk a little bit more on that. I want to just go to three of the recent comments I replied to. I had some questions put to me on one today was KHC. Somebody yesterday, I believe it was, asked about the ag input stocks for an update there. And then today somebody asked me for an update on gold and the miners. So I'll do those as well. And then and finish with the market, a quick update. There's not a lot because the market's been flat last couple days. So I'll cover that last, but definitely want to talk on that. All right, starting out here, natural gas. This is the weekly chart, my long-term chart. And remember yesterday, this is where we hit right here. I told you this you have a pretty significant resistance zone. You can see right here. I've had this forever and a day. I've created this years ago, actually, I believe. Yes, it was years ago. A lot of reactions in that level, reactions from above and below. It seems to just define it. It serves as support when you're above it. And then when you break it, then it becomes resistance. And so it's a big level. And that's why yesterday I stated, my preference to close out, and then told you even the video, even my active trading account, even short a pullback in natural gas. I'm still eyeing the prize. That doesn't mean we're guaranteed to get there, but still looking for a move up to about $5 right there. It's a pretty solid resistance level if we get there, which I suspect we will. Then there will also probably be a reversal trade, close out along, get a short pullback. We'll see what happens. But let me do this for you. I'm going to update this now that we punched through. Remember, this is an end of day chart, so it's going to show yesterday's highs or close, and it'll be updated today at the end of the day. So up until recently, I was highlighting how coming off this divergent low, so far we'd only rallied 113%, and that's well below even the average of these previous moves here, even below the lowest of all those previous moves, which range from about 160 up to 563. Of course, that's a little bit of an outlier because of the invasion of Ukraine, but still, if you take an average of the other ones there, you're talking well north of 200%. So let me update that. To do so, I have to, because this chart's kind of clunky, the stock charts, I'll pause it here, annotate it, and fix it. Okay, so you might not be able to make it out in the video, especially if you're watching on a cell phone, but now it's about 143% again off that divergent low to yesterday's highs, and a nice pullback so far today. Again, not reflected on this chart, and so was and still is a significant resistance level, one that I believe will be punched out. There's that uptrend line I gave you today that we were at. We're a hair below it now. I'm going to jump down to the updated charts in a second here. So if we can pop that, it should be, and based on my analysis, I think it'll be a pretty quick, pretty swift, and mostly unidirectional run up to $5. Again, if my analysis is correct, just based on the both my analysis of the chart and just knowing the history of natural gas, it gets in those points where whether it's shorts being squeezed out or momentum traders piling in, natural gas typically gets those powerful, what I call unidirectional rips, just like you have the powerful unidirectional dips when it decides that everybody wants out around the same time. So anyways, let me just jump down to the short-term charts and we'll move on to the next stuff here. Okay, in the comments section under yesterday's post, the update when we hit that target, I told you that it's time to roll from the Decembers into the January. So up until today, I was showing you the January, the December contract, and the January now has more liquidity in it, so time to roll. And so for those of you that closed out, whether you shorted the pullback or just want to buy back in, you'd be buying back into the January here. And so what that means is price levels are different. So when you look at those charts, and I updated this one for you, you can see this is a 60-minute chart with 3 months of price history. And you can see the divergent lows. We like to go. We did have a divergent high at yesterday's high, small one, and it gave us this pullback. So you were either able to sidestep a good part or possibly all of that pullback, which now I think is better than 8%. This is what we call micromanaging. And look, remember, this is really good support. You can see all these reactions here. Then you broke it. It became, once support's broken, it becomes resistance. They tried to get back up, smacked down, tried one more time, couldn't hold it, fell again. And finally, that was this rip right here once we broke out that level, and now we're back testing it. So although we did undercut that trend line I gave you this morning by a little bit, we're now at even better price support. The trend line only had a couple reactions, and we went through it, so you never really had another reaction here where price support. So to reiterate, I still like that. And if you look at it this way from a very simple perspective, we're still in a near-term uptrend, which is defined as a security making higher highs, which I just circled there, and so far higher lows. Really, this is the most distinct previous low. I mean, we could come all the way down there, and there's no hard set rule with this stuff, but again, it is just kind of, line yourself with the trend. In an uptrend, you want to ideally buy pullbacks to support and sell rallies into resistance. So that's what we have here. There's your update, and that's that. We'll see if it either works out or not. And stops are going to be dependent completely on where you, if you're in this one, where you, what your average cost is and what you're targeting as well. But again, I'm, from a longer term swing trade, and I told you, somebody asked the other day, I micromanage my long term trades. And so now back in those, non-active trading accounts that I closed out the shares, the contracts yesterday, I bought those back a little bit here and back full position here. I like this. And then, of course, cover the short and long back in the active trading account. So there's the update on natural gas. Like any trade, it either works out or not. That's what stops are for. UNG, for those of you that trade ETNs instead. Basically, it's you can see here, but we had one breakout that failed, but this is a breakout, a back test. Again, I'm not putting too heavy a weighting on this chart, the long-term chart, because the decay that you have in the ETN trying to roll the futures, but you can see there's some support there. We did cut through that trend line, although I could probably come in here. Yeah, no matter how I draw that trend line, you're below it, but you do have some, again, more importantly on the futures. I always say the futures are, and actually I can take this line. It was an old target, but I'll just borrow it now. It was a target back here. You can see here we have a couple reactions, several reaction highs. 1, 2, 3, and then a gap, and we're right there. So we're also at pretty good support as well on UNG, in addition to natural gas. PPO's up at positive territory. We got a little hot, meaning overbought, and so that's what happens. When you get a run like this, we're up 25% on UNG. I believe a little bit higher on natural gas futures, and just in the last week or so, we ripped up about 20. So that's that. All right, let's move on. If you have any more questions on this or anything else, just drop me a note in the comment section. All right, let's go to some of the questions put to me today. Somebody asked about KHC, Kraft Heinz. The last update I pulled, it's been a while. I had my chart annotated, and I had here, and you can see it in the comment section under today or yesterday's post when they asked about it. I put links to this. This was the last time I updated. I give you in videos a short setup with a sell signal to come up below this trend line. And I even went so far to highlight in that first video when it was a setup that the nature of this stock, I think I actually said it trades just like natural gas. It's full throttle. Once you get the sell signals, you can't be late to the party. If you wait a day or two, or for Kramer to tell you to get out of KHC, you've already missed the boat. It's too late. And that happened. And then the follow-up video I posted the day of the breakdown, I had a price alert right there, and it was a very shortable trade. It was, it didn't gap down. We broke down, and then boom, a huge down in one day, and that was it. So not that we milked the whole thing down, but that was the last trade update, and it was a sell signal, and that's taken it all the way here. The stock's been lost about a third of its value, and so the question put to me was, is there a divergent low? And It's what I call an ADL, almost divergent low. You can see a slightly lower low, but the PPO is starting to curl up. It hasn't yet made a bullish crossover. That gives me confirmed divergence. And so it's what I call an ADL, almost divergent low. You have a, as long as prices are making lower lows, which they are indeed here, and which is also at support. It's at a major reaction low. So if it wasn't, I wouldn't, I'd say, just so look, there's also potential selling climax. You see some increased volume lately. Either way, oversold. And what I said to that subscribers, it's simple. You just set a stop a little bit below the recent lows and let it run. And I gave 2 price targets right there if you're interested, about $34. Everybody loves those round numbers, so let's click that up, 34 and then 36.30. Always sell just below, slightly below the target or targets that you're targeting in case a seller step in early. So, and of course, it's a dividend-paying stock as well for those of you looking for growth and income type trades or even positioned, investment. This is again probably come full circle. If the market craps out, then yeah, it could certainly go lower, but other than that, this is a weekly chart I just toggled to. You've got nice, you do have positive divergence here on the weekly. And that might have been what the subscriber was talking about. He didn't specify whether it was a daily. I just looked at the daily, but here it is for you on the weekly. So there's a potential trade, and if it can take that out, maybe even more. Next one up was the ag inputs. Somebody asked me, I believe it was yesterday, about the ag inputs. I still like them. They're not screaming, but I'm going to go over those. It was key on IPI. It's the first one that comes to mind. Let me just go in order. A couple weeks back, a month or so, maybe even a couple months ago, I did multiple videos on this highlighting. This was one of my least favorites, CTVA, because of the negative divergence that it had in it. The rest had more constructive charts. It went up a little, put in that divergent high, and then got knocked down. But look, they bought it at the 200s, and it's coming back up. Again, not one of my favorites, but maybe that drop there is enough to satisfy that divergent high. But the other ones I like a little better, I'll show you. NTR, now we already hit the first target in that one. I gave it to you, I guess, back here before the wedge break. And so far, we're holding above that previous low. And if we make an equal, I mean, again, for all intents and purposes, we're there. We're a hair above. But you can see the positive divergence just continues to build. So even if it wants to jog down once more and put in a marginal new low, it'll still be a divergent low. And look, it's simple. We already hit the 200-day moving averages and my first target. We had a reaction there as expected. That's why I list multiple targets. So at this point, that resistance level, the first target, 51.80, has to be taken out, and the 200 days. They attempted to take the 200s there, failed, and got knocked down again. You can see it's been getting rejected on the 200s and or brief rallies above it. In fact, this that time around, it capped right at the 200. The blue line's at 200, simple. Rejection just shy of the exponential, rejection off both of them. They come in together, the blue and red lines, 200 exponential and simple. Tried to get above them, couldn't hold, and that was just simply another rejection there. So it's the big levels to watch. As I often say, not all stocks behave well or respond to the 200 days. A lot do, and you just got to look at the charts. So, don't go off, any 50-day, 200-day, any moving average just because they're popular moving averages. Look at every stock, analyze it. How has it acted, especially recently? And then that's going to increase the odds. Plus, it already aligns with my first target was based on a price resistance level. So again, it's double resistance. We can pop that. It should be smooth sailing up to my fourth and final target. And then depending on how things look, I may add additional targets. We'll see. As of now, those remain the final targets. CF already hit my first target here. Came off that big divergent low, and it's testing it again. And you can see that's a nice resistance level. It's capped all advances going back to the beginning of 2023, including this one. And there's not a lot of them, but again, it's a key level, and it's above the 200-day moving averages, although it's chopped between them. I also say that when a stock is consolidating, moving sideways, you're going to chop, and the 200s don't mean much. You're just going to get whipsawed to death. You want to see trending stocks that keep bouncing back to them and then break out, like the first one I covered, or the last one, NTR. Either way, we're pushing it right now. If we pop there, you can see I don't have really, I could tell you there's a little micro target or micro resistance, but I think this one will be probably open the door to move up to my next target, which if hit, again, we need to break out above just really the recent highs we've been testing the last couple of days. It's about a 21% gain up to an additional 21% gain up to T2 there. Mosaic rejected right off the 200s and a hair below T1 for all intents and purposes, and you can call that a hit if you want, close enough. But now, again, like so many, look at this. If you turn off all the lines here, you can see this is Mosaic, just keeps getting smacked down. You know, it was above, it was bullish when it was trading above the 200. See, they buy it, they buy it, they buy the 200s. Started getting a little wonky here, lost them, tried to recover it, couldn't hold, and then lost it again, and then rejected, tried to recover, rejected, smackdown, rejected, and rejected again. So there's your update on the ag inputs. I'll cover a couple more and we'll move on. So it's double resistance, yeah, price resistance and the 200s, and then boom, if it pops, remember, if it pops and gets up to my second target, if it's anything more than just a brief, maybe 1 week move above, you're looking at a trend change. And so unless the market's crapping out, and even then, these are, you know, they kind of fly to their own, march to their own drumbeat, if you will. They're not heavily indexed. Like Apple, you know, if the NASDAQ 100 goes down 30, 40%, Apple, Tesla, and Amazon, they're all so heavily indexed, they're going to go down just from the forced selling, no matter how good their earnings are or what's going on in those companies. But these guys, some of these stocks may or may not be components of the I don't think any of them are components of the S&P 500. I could be wrong. There may be components of a small cap index, but they wouldn't have such a heavy weighting. So my point to that is they can actually go in a different direction, as they have. You know, the S&P 500's up here, you know, right off all-time highs, and these guys are at multi-year lows. So there's right there's evidence that they are, you know, not moving in line with the market. So if you're looking, you know, what I'm getting at here is even in a bear market or correction, there are some stocks that can actually shine, and that's what we do with here all day long with technical analysis, trying to find I look at the best trades. I don't care what the market's doing at any point in time. I'm trying to give you the best long ideas and the best short trade ideas so we can mix it up. So that's Mosaic. That's what it needs to do. Pop the 200s, and then you've got my targets there from where we're at now. If my fourth target zone hits, it's going to be about a 62% return. FMC, big level still remains here, as I've covered in the recent videos, about 67.90. Pops at, it's going to run, and those are still my targets. Nothing's changed there. ICL already hit the first target. Again, I think I started covering these somewhere in here recently. Hit T1, and it's now taking it out. And look at this. Look what it's doing today. Now we got to see it needs to build on it. And remember, birds of a feather flock together. You want to see the majority of these that I've covered here take out their 200s. But this one right now, ICL, rejected, close to there. It's been trading under the 200s. It's just now starting to crack. I always say if you have to squint, give it the benefit of the doubt, but that's bullish unless it fails. And again, that's also taken out the T1 price resistance. So there's that one's looking good, and it's coming off a big divergent low. So again, guys, I'm looking for trend changes on these. I'm looking for trades that measure well into the double digits. This one, I forget where it was initially thrown out, but if hit, that's going to be about a 60-70% gain up to that fourth target. SMG, Scott's Miracle-Gro. Back at the time, I wasn't crazy about that divergent high, but guess what? It played out. It played out for a correction. The stock is in an uptrend, make no mistake about it. Bottomed here. And you can see this clear uptrend here defined by higher highs and higher lows, right? That's the definition of uptrend. This isn't rocket science. It's pretty simple stuff. And so now it looks a whole lot better. Why? Because the divergence is played out. Even in a bull trend or bull market, you get negative divergences. They're going to give you quite often corrections, not necessarily always a trend change. In this case, it was a correction. It kind of satisfied that, if you will, for lack of a better term. So the divergences have played out. Was probably earnings induced, but look where it brought it. Right to that uptrend line. I believe this would have been highlighted in previous videos here. And I'm going to turn off all the lines. You got it. 200-day moving averages. Look at that. It's above the 200s, and they've been buying the 200 cents, and they just bought it recently, and we're not far off it now. So I'm doing this video. It's still objective entry with a stop somewhat below, because somewhat below is both the 200 days and that intersecting uptrend line. Dual support. Maximum stop would be below this 64.94-ish support there, or that, or even I'd give you a level here if you want to give these guys some room. There's a reaction low there. Plus, there's some other price support, about $60. So, and again, how wide a stop you allow will depend on how high your price target is. A lot of these guys are dividend-paying stocks too, so good for 401ks, IRAs, or just accounts where you're looking for some growth and income type trades, or things that aren't heavily indexed to this extremely overvalued and dangerous stock market. I think the stock market is a ticking time bomb. It just needs that catalyst once the fuse gets lit, and will probably be that break of the trend line on QQQ I've been looking for, but we'll see. UAN divergent low there, and we had a second divergent low most recently here. I don't know why these lines have shifted. Sometimes they do that. Got the 200-day moving averages are compressed right there with my 74.70 level. Pop that, and it should be a straight shot up to 83.60, and then 93.80, and then 104. Well, straight shot to the first one. I think. I'll give you a little micro level there if you are an active trader. Some minor resistance there halfway, about 79.74, but. Either way, just you can see the 200-day moving averages and price resistance. So what you want to focus on there, since the 200 is coming first, see this reaction high? That's the level. I'm going to move it up just to get to the top of that. There's a reaction high, two reaction highs. So, this is where you'd have a price alert set and step in and add to or initiate a position here. Again, we all love round numbers. So I'm at $74.99. Let's make it $75 and set a price alert, and that's it. And so whether tomorrow or 6 months from now that level goes off, I check the chart. I look at the rest of the ag input stocks. If the charts are constructive, I add to my position in UAN. Told you a couple months back that I started taking starter positions and still like it. It's not an all-in sector yet. LRVO testing the 200 days just above it, already taken out the downtrend line. We're getting down to the lower priced one, so you can see these wonky candles. That means it's thinly traded, not a lot of volume, but like I said, I like to take a shotgun approach to a sector, especially when you don't have a sector ETF to trade for it. Biox, cheaply, low priced again, but big divergence forming. Divergence is not a buy signal. We had a breakout and then a back test, so you could make it an objective case. There was the breakout and simply a back test, and we're still above it right now. IPI, we already hit my first target, pulled back, and we're riding up this trend line now, and that's it. So, I would normally say if we reversed right off T1, that would be your next buy signal, but now we have another react. We almost made it to T2, so by the time it's still the next target, and I still like it up to T4. And again, if the charts firm up, especially if the market firms up, I may add additional targets. AVD, there's the breakout. It's been moving higher, and I'm going to give you a level right there if you're interested in this one. Now you have, see, traders love focusing on these previous highs. That's where it's been capping the last few days, right there, right around that previous reaction high. And so you just need to punch the recent highs. So when you see that, even though the reaction high was out 662, you want to look for the last candle right there, the highest point, and that was a high of 668. So you'd set a price alert for maybe 670, and boom, if it pops that, what that is a big old gap that'll want to be backfilled. So there's zero resistance. That's a thin zone up till 768. So you buy it there. You set your stop somewhat below in case it fails. Maybe you got a little uptrend line forming, something like that. You can set it below, and it should be a straight shot up with zero resistance for a gap backfill. Run up to the 200-day moving averages. It's going to give you about almost a 20% gain from the breakout point. Or you could take it here in anticipation, maybe a starter position, add when it breaks out, and then it'll run up. Got the 200s to contend with, just like it did here and here, and that primary downtrend line, all that, a lot of confluence of resistance. So you can see these are all potential targets as well. That's AVD. CGA, China Green, coming off that divergent low. There's a primary downtrend line that needs a break, and the first target 309, then 406. All right, that's it, guys. These are just, I'm getting down. These are low. Oh, nice, nice big divergence on seed right there. That one already put in a divergent low back here. You can see that, and then broke out above the trend line. And just to show you how these low price suckers can run, 173% gain from the breakout point. And I believe I highlighted it back then as either a setup in advance or after the breakout. When you, the way to check, after this video is done, I put all the symbols, I tag it, and then below the post, you can see all the symbol tags. You click on that, it'll load all the previous posts. So that I think, let's see, because that max target zone I created back on October. No, so it would have been for this time around maybe. We'll see. Oh yeah, I could tell you this trend line. I created that back on May 9th. And that was May 9th of 2024. So that was back here. Nope. Okay. That one, maybe I did not cover that back then. I know I highlighted them here recently, and that's what I'm doing now. We've got this big, fat, big divergent low, bullish falling wedge, really. Not that one. Trying to move this one right here, this trend line. That's your wedge. That's your downtrend line. So this is what I see. I sometimes I realize I have a lot of lines on the chart. You might not see what I see. This is a bullish falling wedge pattern, break above there, and then the 200-day moving averages, and we take it out, and that's still my max target zone on this one. And from where we're at today, if that's hit, that's going to be a return of about 353%. Now, that's only a $19.3 million company. Repeat, million, not billion, not trillion. You've got the NVDAs and Apples of the world. They're 3 trillion plus. But, this is a micro cap company, very small company. So their risk is very high. You put too much into a $2.48 stock, you could wake up to a bankruptcy filings and be wiped out. So do you avoid them? It depends on you and your risk tolerance. What I do is, you pay to adjust your position size down. You're going to take a much smaller position size in this one than you would in Mosaic, for example, one of the first ones I covered. It's still worth it because if your target's hit, you make 350%. And that also allows you to have both a wider stop and also not to get your clock cleaned if there's something going on and all of a sudden this thing gaps down 30-40% one day. You're not going to get wiped out. YTN, that one's gone, and whether it went bankrupt or got bought out, I don't know, or went delisted, I don't know. NITO, just a bunch of divergences and downtrend line there. All right, enough on those. That's it. That's the last one anyways. What else did I tell you? Oh yeah, gold. All right, somebody asked gold. You can, again, I'd reference the chart, the post, I'm sorry, in the comment section. It was under today. I made the reply today. A lot going on in gold, but here's it in a nutshell. And remember, the silver and GDX are going to follow gold ultimately. So what I see here, this is a weekly chart, and I have the same trend line on the daily. Last week, we broke that and printed a solid close below that well-defined uptrend line. But this week, and today, remember, is Friday, so this is all that counts on this time frame. Weekly chart, nothing matters Monday through Thursday. The only thing that matters is how the 4 p.m. Friday candle prints. That's a weekly candle. Right now, we're above it, not by a whole lot. If they fade it into the close and we park on the trend line, then that's going to be a breakdown and a back test. But the fact we're back above it makes last week's sell signal a whipsaw. So my reply was, look, I'm just watching. That's why I haven't updated the miners. I was updating them quite a bit recently, highlighting that we're going to probably get a pullback, which we did. I gave you the GLD. Also, I had these targets for you from a few weeks back, T1, 2, 3, 4, 5. This is a 60-minute. We hit T4 and then reversed, and it was a pretty sharp reversal, a little V bottom there. That's a 60-minute chart of gold, GLD. And then GDX, I also gave you targets back here. It was 1, 2, 3, 4. We hit that fourth almost. This is good support here. But here's the thing. We're still below that trend line. Let me show it to you on the daily chart. GDX, this is the primary uptrend line. I've been talking about GDX for a while now, how it's been trading a lot like an EKG. You get these little divergent highs and you get these pullbacks. It's like an upward sloping EKG there. And again, each one had clean, well-defined trend lines. So we had that sell signal there, which, it resulted in a drop. So if you were long the miners and you heeded that sell signal, got out, you sidestepped a 20% give back in profits, or if you were a short seller, you made a 20% profit. And you can see we fell right down to the 200-day simple moving average, but we bounced back to resistance, and we're still well below the trend line. So based on this chart, and I finished my comment that, look, I don't have a strong opinion, so I'm not engaged in this sector right now. But if I had to guess, I'd say we get another leg down based on this. And gold, and we'll see if it finishes back above that trend line this week, how much above, and where it goes next week. So again, if once I get a stronger degree of confidence, I'll post these as setups. But again, we milked most of the meat off that bone, and I just don't know if there's another leg down or not. Oh, and I also mentioned in that post, I didn't follow up with the chart. Let me just, the dollar and the euro, just look at this cratering in the euro right now. US dollar going crazy. That should be even, it says something about gold, how it's rallied recently. Gold usually moves inversely, opposite the dollar. And so the fact that, remember, we just had a healthy correction in gold and in the miners. And this certainly played into my outlook. Remember, the dollar, this is UUP, the dollar index reversed exactly where it should have, right off long-term uptrend line support. And then the euro fell. But look, the dollar is at pretty significant resistance. This is where the dollar index has peaked out around here in recent years. So if it pulls back, that should be what I call a net tailwind, meaning net bullish for gold. Doesn't necessarily mean gold must go up. It just means a falling dollar is typically bullish for gold, because gold's priced in US dollars. So the lower the dollar is, or the dollar index takes more dollars to buy an ounce of gold. That makes the price go up. And that's if you freeze supply and demand. So we've seen gold going up in recent days. That rally I just showed you, first of all, it was pretty oversold. A lot of people have been wanting to get on the gold train and GDX train for a while, so there was that. Of course, it's not going to go down forever. But it's kind of bucked this trend in the dollar. And so, like I said, this is my reply was, we're seeing some wonky moves right now in the currencies. So just don't feel like, I think there's better fish to fry for me right now. Alrighty, next up, I'll give you a quick update on SIMO, SIMO, the one I gave you yesterday. We did break out, and there was a solid close, so that's a long triggered yesterday, and we're coming up. This was that first, I called it R1. R1, if you're not familiar, that means first resistance. It wasn't enough to make it a price target. Now you could certainly, if you want to only get 3% or whatever that pop was from the breakout, but that's means we still need to clear that. We're likely to get a reaction there, a minor one, and then those are the targets. Again, like I said yesterday, it's either a direct play hedge to a short on the semiconductor sector ETF SOXX, or just a pure play long if you're looking for long trade ideas. Even that SMCI, just 2 days popped that below that stop. Yeah, I told you, that was big support. And then I figured they reversed it. We still had, the chart got even more constructive. And remember, we had a divergent low. That marginal new low was still a divergent low. And it's gone all the way up to that T2 I gave you now. But that's resistance. I just wanted to update it because if you're in it, that's was and still is pretty significant resistance. And that's still a maximum bounce target if we get their T2 that I gave you before. And that's just, I'm covering that because that's another semi. And then it's big brother, if you will, NVDA to SMCI. So far, I wish, I wished and hoped we'd have some better visibility on which way NVIDIA wanted to go post earnings, but it's just gone sideways. This is that 60-minute chart. Remember, just before earnings, we hit that T1 level. We bounced up after earnings, made a marginal new but still divergent high, and it's just going nowhere. Now, that does say something. This thing has so far seemed to run out of gas. It's been running on fumes for a while. But again, nothing big happens until that purple, the primary uptrend line here, you can see it right here, uptrend line off the October 2022 lows gets taken out. And if we do, that's to me a death blow for the stock market right there, if and when that comes. Speaking of the stock market, we're still looking at that 60-minute uptrend line on QQQ. This is a 60-minute chart. I know it's a busy board. Just look at the purple trend line. That's all that matters right now. This lowest one right here. We've been skating on it recently. And we have that big gap. We entered the gap there. We almost backfilled it. And we need to break that in order to make a case to either get short if you're not already short or add to. Again, since NVDA, there's been, NVDA is out of the way, so you don't have a huge gap risk. But, from a bigger, longer term perspective, I'm going to jump all the way out to the weekly chart. Well, we remain right at my market top of my market top. We're just below the top of my market top range back from June. We reversed there. We had that 17% drop, rallied back up, projected at the top of the range, and that's it. So I still maintain these longer term targets. I still think that's where we go. But there's that same trend line I just gave you on the 60-minute chart, really comes off the recent lows. Right here, I'm drawing it for you there. We need to break that trend line. The 60-minute will get you in early when it breaks. But if you want to increase the odds, you wait for a daily close below, or even better, a weekly close. The problem with a weekly close, which has even a higher probability of those longer-term targets getting hit. And that's how the longer-term targets were originally, still are based off the weekly time frame. Again, 60 will get you in quicker. But the thing about it, when it goes, I suspect if it goes, because today's Friday, it's not going to go today. So if it goes, let's say on Monday, Monday after the weekend. And we have Thanksgiving next week too, abbreviated trading week, of course, keep that in mind. But, if you wait till the end of the week and the breakdown came on Monday, by the end of the week, this candle, the weekly candle could look like this. You could already be down to the 200 days. I could see that happening quite likely. I think there's going to be a lot of stop loss orders there. Shorts will pile in, longs will jump out. And so that's it. So you have to decide how you want to trade. And one thing is, you don't have to make all or none positions, or decisions. You can, take a starter on a 60-minute break, add to it on a daily close, add to even more on a weekly close, especially if you're, long-term trend trading. These are trend targets. I'm calling for a trend change. The swing targets are based on a 60-minute or daily chart. These are trend targets that won't be hit until 2025. And that's about it. The only other thing I can think of, somebody asked me about XLF. There's not a lot. Just wait and watching. Still has big divergences. They're still getting that bid from the Trump pump. Trump all pro deregulation, less regulations on the big banks. Levels right here. You can see there's the pop, Trump pump pop. We've gone mostly sideways. Today we're a little higher. Still, on just about all time frames I look at, even the 60-minute chart, I haven't mocked it up recently, but let me just do it right now. You still have now just recently put in a divergent high there. And I always say divergence is not a sell signal. What you want to see after divergence are breaks of support. Got a little support there. And of course, the gap itself. Where you enter that Trump pump gap right there, the post-election pop, we're probably going to backfill it. And then what that'll do is start to flip over some of the longer-term indicators on the daily and weekly chart, confirm the divergence there and all that. So right now, again, I don't have a strong opinion. Certainly, I wouldn't buy the financials with your money right now, but I can't make a case to short them either. So just wait and watch and see what happens. KRE, two regional banks, same story. That divergence is still there on the weekly chart, and they're also around. It's not super well defined, but that's pretty good resistance right there. And there's a little reaction high above it that we're just below. But again, we need a sell signal. That'll probably come. I mean, if we look, there's a potential for an island cluster top. You have an island of candles. If we were to gap down next week anytime soon, gap below there, that could put that in. That would be a sell signal. When you see an island cluster top form, you get the gap down. You can short it with a stop above the top of the island, or even a little tighter if you want. But again, nothing there. In that sector, I know we have at least one long trade, PayPal, which I gave you way back when. We already hit the first target. It keeps moving up. I just want to, I actually updated you last week or the week before. For all intents and purposes, you could say T2 was hit, but I'm not considering it. It came close enough. I always say sell a little bit below the actual resistance level. That target I gave you was 89.81, But in hindsight, when I look and I zoom in here, see these candles right there? I should have had it at the top of these little, there's an island cluster top for you right there. 2 candles, although it didn't come at the end of an uptrend. It's not really where you want to look for it. But, if I take that across, that's really where we stopped. And that was my bad. I should have noted that. I still think we'll get there. This thing's in an uptrend if the financials can hold up until next week. So we're making a zigzagging higher. Oh, I actually gave you 4 targets. So yeah, no reason to pull it yet. Although, look, there is divergence building. I can tell you, I probably will pull this trade next week if T2 is fully hit, especially if T3 gets hit. I just want to give you an update on that. So you've got maybe an uptrend line forming, a little wedge pattern there, divergence, but continue to walk higher. And that's about it. Like I said, flat day. Nasdaq 100 is up 0.2, now 0.3%. S&P 500 up 0.22%, so pretty much flat. And S&P just like QQQ, although QQQ has a better trend line, that's the one I'm watching, needs a break. The other thing I'm watching, and I mentioned this recently, I haven't updated the disparity, a very stark and unusual disparity with the internet, the rest of the world. This is CWI. I covered this when I covered all the, Europe is burning, or I should say, America fiddles while Europe burns. And I'm talking about most of the major European bourses or indices, whatever you want to call them. You have those markets going down. This one is testing the 200-day moving average again. CWI is pretty much pretty much the world minus the U.S. It's got both developed and emerging countries in there, their markets, and big divergence. Been moving down lower. Is at support about the 200 days and price support that I had here, that 28.49. But if this level, that uptrend line gets taken out, that's going to be quite bearish. And again, you can see the S&P 500, meaning the U.S. here, kind of going in the opposite direction, which is, again, in those videos that I showed you recently where I covered the international markets, I showed you the very, very strong positive correlation between the U.S. stock market and the rest of the world, and that's just kind of gone in 2 different directions. So there'll be a mean reversion, a lot like I warned of with gold and the U.S. dollar and euro recently, and that happened. And what happened is gold and the miners had a big healthy correction. And so that means either the U.S. is going to go down, the rest of the world will come back up, or a combination of the two. But based on my analysis, my long-term analysis and outlook for the market, and the fact QQQ is still within my market top range, my outlook is the U.S. will ultimately play a game of catch-up to the rest of the world. But that's it. That's my outlook. But the levels that have to be taken out, such as the trend line on NQ, QQQ. And as I always say, the stock market or index ETFs or futures are just one of many trades. There's never been any point in time that I've only had, trades on the stock market. I always make a point to throw out all asset classes that look good: bonds, commodities, precious metals, crypto. I'll give you the first official trade idea on crypto setup in a while. Setup is just that, an untriggered trade waiting for an entry. Is this the one I gave you? No. Which one did I give you? No. IBIT. Of course, BRR futures. Or in that post, by the way, if you missed it, in the comment section, just right after that post, I fired off. If you like futures, but the BRR is a pretty hefty contract. It's almost $500,000 of net exposure. And so MBT is a micro Bitcoin. I think it's like 9,000 per contract is the net exposure to Bitcoin. So MBT, you can see that in the but I'm going to tweak this trend. This is the uptrend line. I'll tweak it ever so slightly. That's where I had it when I screenshotted it this morning. But this is it. So we need to, there it is. You need to tighten it up here a little bit, come in, capture that recent low. So if you're replicating that, which I recommend if you're interested, of course, that is the low on the 60-minute candle, the 4 p.m. closing candle on November 4th. up to and just skirt these latest couple candles right there, and that's it. And then what you do is you set a price alert, set it and forget it. Probably won't go, could go off today, but probably next week if it's going to happen. But I'm seeing a lot of volume, a lot of potential buying climax here, and this is the nature of the beast. That's, you know, these official Bitcoin ETFs haven't been around very long. So if you want to, if you chart and you don't have a futures chart and you can't chart Bitcoin itself, the crypto or the futures, you can use GBTC. It's a ETF-like instrument. It's not exactly an ETF, but similar. And big divergent high on the daily chart. And there's a primary uptrend line. If you're wondering where I might extend this trade to, would be a pullback to there. And even then, if we get there, you're going to have this big wedge forming right here. That's what you're looking at. There's your primary uptrend line. I missed it on the draw there, but you see what I'm doing. Take this uptrend line, go down to these lows from the beginning of 2023. And so if we can reverse here soon, we're going to have, this is what I refer to as potential divergence. That divergence will be confirmed if and when the PPO makes a bearish crossover, meaning that blue line crosses down below the white line, the signal line there. And then we effectively have put in an equal or lower high with prices making a higher high. And then that sets the stage to run down there. And then ultimately a break of that level. You take the widest part of the wedge. If you're wondering what the measured target would be, that's about right here, from that point down to the wedge, to the trend line, the bottom of the wedge. And then you add it to where the wedge breaks down. So let's just assume it breaks down there. That's going to take you down here. And if so, that would give you a potential drop in Bitcoin of about 70%. That is unlikely to happen, in my opinion, until and unless QQQ goes on to break this trend line and then start to get away from my market top range right there. Here we go, zoom in. So if this happens and QQQ goes on down to hit my next target, which is T3 down here, I think Bitcoin will go down with it because it's been a risk on asset. It's been moving in line with the stock market lately, and I think that'll continue. So that is it. I will wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.